Today is October 7th, 2020. You guys are well. Let's get my second dose of caffeine. 1 second. Fabulous. So, the dollar index, another tug of war, another week, another tug of war between the bulls and the bears. Yesterday was a pullback day, so look at the dollar index. It pulled back quite some bit from this point. I really thought on this candle we were going to continue lower, but price pulled back, and then later in the London session we had another attempt to go lower. Price pulled back, created a bearish hammer, and then this candle is trying its best to go lower. Now this, if you look at the daily candle, this was the week so far for the dollar index, and that tells you consolidation, right? That is consolidation. We spoke about this for the dollar index for a few weeks now, where if it's consolidating, it's not a good time to trade, and each candle represents a day. So this is today, this is yesterday, this is Monday, this is Sunday, this is Friday. So if you just take those 5 days, at first glance, you'll see that this is consolidation, right? Where there's no separation among candles. Harder, it makes it a bit of a headache, and you aren't able to separation among the candles, even here. But the last 5 days, including 2 days from last week, it has been nothing but choppiness, right? And if you look at the 8-hour time frame, undecisive of where it wants to go, absolutely no direction. The only thing we can rely on is that the original trend is a downtrend, and because of that, we have to stick with that original trend. So all week, here's our alert that we placed yesterday. We were waiting for a break for 93.30. Instead of a break, price pushed back up, and then it's coming back down again. So for me personally, we breeze over a euro and GU, and then I'm gonna start looking for trade setups on the miners, because I cannot be bothered by a consolidated dollar. I can't handle. I'm not gonna be letting the dollar dictate. I know the dollar is the major mover in the markets, but we're gonna have to reach in our toolbox, reach in our bag, and pull out some tricks. And so we have to go to the markets, find the that will, that look high probability, and take those. And again, if this consolidates, so will the miners, but to a lesser degree. So we're just gonna have to take that risk. We'll just take that, that gamble. So let's get to it. So I'm gonna go straight ahead. What's really happened? Nothing we want to be a part of. So this was yesterday. We were waiting for a break above this high we created, right? Because knowing us, we're disciplined traders. We don't like to be caught in the hype of missing out. So price created this high, and we wanted to clear it. That's the only way we take a long for EU. Otherwise, we're sitting on our hands. And that did not happen. So what did EU do? After the momentum died, and this is another important lesson. When you're in the trend and momentum starts to die, let's say you're in an uptrend and momentum, you can see here momentum just completely died. When this happens, this is a warning sign for any buyer, for anyone that's long, to maybe get out, because you will have sellers that come in after this resistance that's created on the smaller time frame. So after that was done, price jumped down quite a bit, but based on the choppiness of the US dollar, prices pulled back. And we looked at this area as a potential retracement point. We pretty much caught it to the pip, but this was an okay retracement point because it has not, and this is the most significant low we have in the current uptrend, right? So if we were to clear this low, then all bets are off about going long. We can start looking at shorts, right? But we have not. So despite how choppy and ugly it looks, this is still a higher high, higher low, higher high, higher low, higher high, higher low, and then we might go up to create a new higher high. So that is still in the table, still in play, and let's get into what we can do next. So I'm gonna turn the preview off now. This is just a little